What's up YouTube? Welcome to Wise Wealth, where we dive into all things personal finance. Today we're bringing you another one of our top 5 videos, and we'll be focusing on growth stocks. We covered growth stocks on the FTSE 100 last time, link in the video description below for that, and today we'll be looking at US growth stocks. These stocks focus on getting the most capital appreciation on your investment. We'll back up our examples with historical growth and why we think these stocks are destined to grow further. If you like this type of content, be sure to hit the like button to let me know. This is part of our top 5 series that we cover on the channel. If there are other top 5 ideas that you would like me to cover, be sure to let me know in the comments below. Subscribe to my channel for more videos like this and make sure to enable the notifications by clicking on the bell icon. So without further ado, let's get into today's video. First on our list is Plug Power. Plug Power is a leader in the development of hydrogen fuel cell systems aimed to replace conventional batteries in equipment and vehicles powered by electricity. The company is at the forefront of the green hydrogen revolution, as well as drawing attention from investors looking to push forward the ESG drive for sustainable investing. As of this video, they're currently trading at $65.77 per share. The stock has exploded over the past year, growing an astronomical 1,490%. Large deals with SK Group and Renault have solidified its balance sheet and awarded it with market leader status. The general consensus among analysts rates Plug as a buy, with 11 analysts rating a buy and only 3 giving it a hold rating. Price targets have increased recently after the last investor call, with the firm increasing its guidance for $300 million in additional revenue for the year, as well as a massive increase in guidance over the next 5 years. The firm has hinted at another partnership in the works with General Motors, but has not yet officially announced it. Once this is finalized and announced in a press release, expect the stock to jump significantly. The announcement of the SK Group deal and Renault joint venture saw the stock jump 12% on the news each time. The green hydrogen economy has benefited from reduced costs recently and growing adoption by businesses, with Goldman Sachs analysts seeing a potential revolutionary opportunity starting to emerge in the industry, which could be an addressable market of nearly $12 trillion by 2050. If that is somewhat accurate, I'd want to own stock in the market leader in Plug Power. Number 2 on our list is Apple. Everyone knows Apple as the designer, developer, and seller of their own brand hardware and unique iOS operating system. As of this video, they're currently trading at $136 per share. Apple is known as one of the 5 big technology companies listed on the S&P 500. The company's innovation over the years has transformed the way we consume tech products. They reformed the smartphone industry, created a unique and user-friendly operating system that has guaranteed significant market share in the long term. They've nurtured a sticky customer base, consumers that use their products so much that they have become so used to them that the possibility of switching away from a competitor simply isn't there. Ask yourself, how many people do you know who have an iPhone will simply continue to buy one again and again so long as they keep releasing new models? Because of this, I think Apple is a great investment. They continue to release products at a premium consumers are willing to pay. This guarantees steady revenues. Coupling this with ongoing innovation, and Apple's share value will continue to see significant growth. Their recent earnings report surpassed expectations in every single way, with over 1 billion iPhones currently active in their user base. Additionally, as a tech firm, the dividend yield of 1.07% while experiencing significant share growth is a rarity. While we're not necessarily in this stock for passive income, the growing dividend over time, as well as continuous share buybacks, is always welcome, and is definitely an advantage Apple has on this list over others. As far as growth stocks go, Apple is one of the best out there. Number 3 on our list is Alphabet. Alphabet is a conglomerate with over 400 subsidiaries, with its most popular subsidiary being Google. As of this video, they're currently trading at $2,089 per share. The company has soared in the last week, climbing 8% on a blowout earnings quarter. Advertisement spending has increased significantly, with many consumers staying at home over the past year. This may not be expected to continue at the current rate. However, the diversity of the company and its subsidiaries almost guarantees it will make up for this in other divisions. A growing focus on Google Cloud will drive market share in a high-growth industry, competing directly with the likes of Amazon Web Services and the clear leader that is currently Microsoft. I think Alphabet suffers compared to other popular tech stocks because its name is not the household name that Google is, and for that reason I think it sometimes gets overlooked. The firm doesn't currently pay a dividend to shareholders, but the growing profits and cash flow gives it the possibility to do so in the future. The stock is up 44% on the last year, and it trails popular tech stocks in price to earnings ratio. At 33, it is modest when compared to the elevated valuation of other tech stocks. A lot has been made of the rise in valuation of these firms, raising concern that we may be in a bubble. If that is the case, Alphabet is modestly priced. Many expected an adjustment in share prices of technology stocks, but earnings season has showed that these firms are the big hitters for a reason. They blew away expectations and have fully justified their stock prices. Number 4 on our list is NIO. NIO is China's leading electric vehicle provider. They provide AI-embedded luxury cars to the Chinese market exclusively, with the potential to expand globally in the future. Their offering includes a sophisticated battery switch network and a lifestyle service through NIO Lounges that enhances the luxury pull of the car maker that has brought so much of the middle class of China into its customer base. As of this video, they're currently trading at $56.67 per share. After the annual company event, NIO Day, which announced the new ES8 model and optimistic outlooks for the future, the share price soared past $60 to all-time highs, where it has pulled back to its current price. The stock has trailblazed its way to the current price through a 1,190% share value growth in the past year alone. It has done this with the impressive delivery numbers growing triple-digit percentile compared with equivalent months past. The Chinese EV market is booming, with government subsidies assisting greatly in the industry growth. Coupling this with the growing call for sustainable investing and a transition from the combustion engine to electric, these tailwinds have allowed the company to grow to what it is now, and it looks set to grow even further. Investors have profited from riding the wave of these trends, and I think with further strong delivery numbers, NIO will continue on its path to consistent and high share value growth. NIO has managed to scale production through outsourcing the manufacturing of its vehicles to JAC, a leading car manufacturer used by Volkswagen in the region. Like Plug Power, I think NIO is on the right side of a revolutionary trend that investors can capitalize upon. Finally, at number 5 on our list is Snapchat. Snapchat is a multimedia messaging app. A popular go-to social media app, Snapchat is widely used by millions of users on a daily basis, which has seen incredible share growth in recent times. As of this video, they're currently trading at $63.65 per share. The stock is up 292% in the past year alone. Many thought the stock was overvalued going into earnings last week, where like other names on this list, it beat revenue expectations comfortably. The stock fell on the news, very much in line with the buy the rumor, sell the news mentality that has engulfed the market as of late. But the stock has proved more resilient than ever, rising not only to erase losses, but climb a further 9% on the day. Social media is front and center in our lives these days, and advertisers are reaching out to end users through aggressive marketing campaigns on these apps. Snapchat has benefited from this greatly, and so long as we continue to use social media on a daily basis, advertising revenue will continue to flow. I've included Snapchat on this list, but like for like, social media apps that monetize effectively are also good stocks to watch. If you want more info on how to spot these sorts of stocks before they grow massively to find your first 10x stock, check out my video on this. It explains the cycles that growth stocks go through, how we can harness them, and how to capitalize on this so that we land a huge growth stock before it soars. Click on the icon in the top right hand corner to head there. I'll also leave a link in the video description below. So there you have it, 5 top growth stock investments in the United States for 2021. Thanks for tuning in today. I hope you got some value out of it. If you did, be sure to hit the like button, it really helps me out. Make sure to subscribe for more if you haven't already, and click on that bell icon to get notified when I upload new content. Let me know in the comments below if you have shares in these companies, or if you think there are any others to include on a list like this. I'd be interested to hear your thoughts on what these might be. So until next time, see ya.